All right, inflation rates just came out, guys, and we are at a 13-year high back to 2008, 2009. Things are looking scary. This is the largest one since the Great Recession, and I'm going to tell you what you should be doing to prepare your business for what is likely to come next. All right, so let's go ahead and get into it. So I'm looking at Market Watch right here, 13-year high, stress in the economy. Consumer price rose again. This was expected, guys. We've been talking about this. I had several episodes talking about this. We were anticipating it would be over 4%, and indeed it was. 13-year high. Immediately the market started to crash. I mean, it already is down multiple percentage points already today. Now, I will say this, and it talks about this in this article here as I go down to the bottom. The cost of goods are up. Goods and services up tremendously. And some of that is artificial. Some of that is due to the fact that things are starting to reopen. So you're going to see airline tickets and travel destinations and things that you're going to see those prices come back up, right? Because people are starting to get out and do things. The flip side of that is you're seeing like the cost of lumber. Those prices are artificially high because supply chains have been disrupted because of the pandemic. One of the biggest concerns that I had going into this last presidential election and making a switch, not just particularly from one individual to the next and one administration to the next, but you're in such a trying time. Usually when that happens, what you see is the administration that's in office usually will retain, because it's just so difficult to make that transition. And moreover, I had very little confidence in the head of that administration, being Joe Biden, being able to be cognitively at a place to be able to navigate what's required. We put so much stimulus money in the market. In fact, and I've said this in several episodes here recently, 40% of the money in the market right now, in circulation, the 40% of the US dollars that exist in the world right now were printed in 2020 up until right now, and there are no signs of that slowing down. In fact, they're doing the exact opposite. They're shooting for 45%. They're shooting to put out more stimulus money, trillions and trillions of more dollars, Green New Deal, stuff that we should not be talking about doing, in addition to, here's the kicker, raising taxes. You've got businesses now on the tail end of getting crushed by a pandemic, historic pandemic, 100-year occurrence, right? Haven't seen anything like this for 100 years. What you want to do is cripple the people that are going to help pull us out of this really tough and trying time. But that's the opposite of what they're doing, specifically with cap gains. Capital gains, they're looking to double capital gains. Now, if you're a small business owner, and that's what we're going to talk about, none of this is going to affect you. In fact, I have an episode here coming out. We're going to link that below, talking to a CFO about specifically how that's going to affect you, the small business owner. Most of these tax plans, most of these things will not affect you. However, indirectly, this will trickle down to you. And here's what I think is going to happen. This could be artificial. Actually, in fact, if you look at this article here at the bottom, the big picture is that inflation has risen sharply and it's going to stay high for a while. Businesses still can't get many vital supplies on time or at reasonable prices, and now the cost of labor is going up. They say the U.S. Central Bank, for its part, is betting that this is a transitory inflation will fade by next year and fall back towards its long-term goal of 2%. For most of the past decades, the inflation rate has hovered well below that mark. The economy will likely be fine if the Fed is right, but if the central bank gets it wrong, all bets are off. The Fed could be forced to raise interest rates sooner than it wants and potentially choke off a budding economic recovery. So here's the deal. If it's relying on the Fed, I think this is going to be more of a permanent thing than anything else. A couple of things that I'm looking for. So unemployment just came out. It's on the rise. Despite the fact there was 8.1 million jobs available, unemployment is still on the rise. That was the first red flag. The second one I was looking for was exactly this, is inflation on the rise. Now, if you're going to if you leave it be, if you let companies reopen, if you don't jack up their taxes, if you open up supply chains, if you don't do things like cutting the Keystone XL pipeline, making us energy independent, sure, I think we were well on our way to coming out of this better than most. I think we were on our way to making a full recovery, probably better than other countries around the world. The problem is that literally they're doing the exact opposite. You can only do so much. And the problem with the economy is that what you'll find, it's usually delayed, right? There's a delayed onset. So things you do take a while to see the ramifications therein. So a lot of people were like, well, why didn't we see this already? There were many stimulus checks last year that artificially put a Band-Aid on the problem, right? We were going to eventually have that inflation come around the corner. And that's why I get that they're saying that it's transitory inflation, that basically they're saying that, hey, look, we expected this. Like, we knew this was going to be, artificially pumped up, and that, but it's going to require leadership and somebody that actually understands fiscal responsibility to be able to get us out. And I honestly don't see that. I don't think that that's Joe Biden's powerhouse, nor his administration. I think they're going to continue to pump money and print money at rates that we've probably never seen before, and I truly do mean that. What they're proposing, if they can pass it through, which they have a small majority in the House and Senate, but if they can kick it through, we got big problems. So here's what I would do if I'm a business. This is what we're doing. I'm going to tell you what you should do as a business owner. For one, this may end up benefiting you. So this isn't all doom and gloom. I had a moving company in around the 08, 09, right therein, right after. So 2011, 2012, we were still in the midst of that recovery process. We actually thrived. And the reason being is because people were downsizing. They were losing their homes. They couldn't afford it any longer. They couldn't make the payments. They were downsizing. So they were moving into apartments and or having to put things into storage. So we were in demand, right? That was an essential service for many people. They physically cannot do that move themselves. So it actually benefited us in a big way. If you are in that essential category, this may not hurt you. All right, so analyze where you are strategically. Are you in that essential category? If you are not, right, if you are outside of that category, well, I'm looking at a couple things. A, what are you doing? Where are you investing? Right? So if you're individual stock picking, you better get out of that immediately. Like if I don't even know why you're still doing that. I'm not investing in any single individual stock. I'm solely in index funds, period. And mostly I'm in crypto. Like if I'm betting against the US dollar at this point because it's weaker than it's been in a long, long time. The last thing is going to be looking at your overhead. What are the unnecessary? It's a great time for you to trim some fat, right? As a general rule and a protocol, you should be doing this anyways. Are you trimming the fat? Are there expenses you have? Are there tools that you signed up for you're no longer using? Are you signed up for a streaming service that you're not using? Both personal and business expenses need to be considered here. You're going to have to get lean and mean because things are going to get a little hairy. Even this is saying for the next year, inflation rates are going to go up. The problem is when inflation goes up and the economy, the market starts to go down, and people stop spending money at the rates that they used to, right? So they start packing it in the same way. The problem is that they're going to stop spending money on things like your business and spending things on what they deem to be luxury services or goods versus the essential ones. So for you, you're going to see people that, yeah, sure, they can still afford it regardless of whatever is going on with inflation, but you're going to have a sizable portion of your market that, quite frankly, they just can't afford at this point, where they get laid off, companies start laying people off, obviously unemployment's going up. All those things can factor into them not making purchases from you. So you want to be able to accommodate for that. You want to prepare for your numbers being down 5 to 10%, if not more, over the next year and or several years. The good news is I think they're going to lose the House. They being the Democrats are going to lose the House in 2022. Now, I would say the opposite if it was purely Republicans and they were doing crazy stuff too. You want gridlock in D.C. You want one house or one government body to be owned and dominated by one party and one to be by the other because the market loves gridlock. So the other thing is they're not going to be able to pass things through or do anything once there's gridlock. So we've got a year to hunker down. If we can get through this period, right? If we can get over this hump, I think you might be okay, but plan as though you won't be. So plan for the best, prepare for the worst. I would be cutting those unnecessary expenses. If you had planned to hire somebody, I would hold off on doing that. See if you can find some tools to automate it instead. Do what you can to be lean and mean. Focus on profitability, not just gross revenue. That doesn't mean go out and seek new opportunities. I think there will be an abundance of them. Every crisis does bring new opportunities. But this tells me we need to at least be concerned, and I would be prepared for the worst. That starts with A, getting as profitable as you can. Sit on as much cash as you possibly can, and then be ready to make moves and acquiesce in accordance with that. I'll keep you tuned. I'll keep you posted on this. I'll keep you up to date with what I'm finding. I'm sure more updates are coming. See you guys in the next one. Make sure to watch the other videos that we've done talking about the subject, specifically my interview with Justin Donald, investment guru. I'm going to link that one right here so you can check that out next.